Welcome back to Fast Market here on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks, but let's bring in our next guest for our cash tag segment. That's going to be Landon Swan, the co-founder of LikeFolio. Welcome back to the show, Landon.
Thank you. Good to be here.
All right, so we're talking fixing up your car, do it yourself. AutoZone just off of all-time highs. It's up over 20% so far this year. It's had a really good run. It seems to be the leader in this space. But do you guys have data to back this up? Because the stock has just been on a moonshot here, but is your data supporting that?
Yeah, you're right. I mean, the stock is incredibly high. It's been doing very well. And this is, as people are experiencing very high car prices, I think they're coming down now. But over the last year and a half, car prices have been so high that it makes a lot more sense to just fix what you've got. And so they kind of find themselves in the sweet spot of a supply chain issue. But when you look at, consumer mentions of the company, for example, it was on a nice uptrend sort of pre-COVID. But then when all of the car prices went crazy, used cars were going for super premiums and everyone was fixing up their cars, there was a big spike. And we saw that in late 2020. It's come down and the uptrend has sort of snapped and we're kind of flatlining as far as mentions go, but the stock has continued to climb. So it's kind of going away from our data a little bit here. And I would say that you could make the argument that based on this, it's a little bit overpriced at this point. And when we look at the competition, they've got a lot of competitors. They are the clear leader, though, among this group. So they're the sort of the behemoth. But when you look at sort of a scatter plot of the competition between O'Reilly, Advanced Auto Parts, Genuine Parts Company, AutoZone, AZO there is not exactly where you want to be. You can see from the size of the dot, which represents the total number of mentions, they're the behemoth in the group, but their position on the chart is really not very favorable. So you want to be further to the right. That's showing growth in purchase intent, people talking about going to your store. They're sort of in the middle. And you want to be higher on the chart. That's where people are expressing happiness or not expressing unhappiness. And they're right around 50%, which is pretty low in the space. And there's actually a pretty big gap. I mean, GPC's up there in the high 80s, and O'Reilly Advanced Auto Parts are in the, mid 60s, mid 70s. So don't love where they're at on this scale. And what this tells me is they're the current leader, but they're probably being chipped away at by some of their competition. So I do believe that they have a lot of tailwinds. I mean, when you look at people talking about, maxing out their credit cards or concerns with interest rates or whether or not they're buying a used car versus a new car, all these things, all of these are sort of tailwinds for a car parts company. This kind of data suggests people are more likely to fix their cars than go buy a new one. You can see that new car purchases are down, used cars are up. And of course, the older they are, the more repairs they need, the more times you got to take a trip into AutoZone. So they've got tailwinds, and I like where they're positioned long term. I just worry that their position in the market, the stock price being so high and seeing all their competition sort of coming after them, that gives me a little pause at these levels in the market.
Yeah, the run this stock has had, Landon, is incredible, and the macro backs up this move. Here's the data. Kelley Blue Book came out at the end of October. The average new car price, $48,200. That's the average new car price. The average age that automobiles are currently owned by a driver, 12.2 years. So people are investing in the car that they already own, not a new car, as new car prices goes up, and now you've got a weakening economy. The macro data favors a company like AutoZone. So is your point that some of their competition, the competition within this group of do-it-yourselfers, they're losing ground to other competition because the overall macro environment for this is doing extremely well, favorable to AutoZone, and their stock is flying, Landon?
Yes, absolutely. I think that the rising tide is lifting all ships, right? But I think that based on our data, every single one of their competition is coming after them, and they're gaining ground. GPC is the only one that I'm a little worried about as far as genuine parts companies, the only one I'm worried about as far as purchase intent gaining ground, but they've got extremely happy customers, which we know leads to increase in conversion of customers later on down the road, or at least retaining of those customers. So AZO's position here on this chart is a little concerning. Needs to be further to the right, needs to be further up. They're the behemoth. I think that they've done extremely well, but moving forward, again, where the stock's at, expectations have to be very, very high. And I just worry that anything that comes out of this earnings report that hints at any level that's not perfect is going to be seen as a potential opportunity to sell. And I'm a believer in buy high and sell higher. So I'm not just saying, it's high, so you need to sell it. That's not my position. I'm just worried that long term, they've gotten a little bit ahead of themselves. And if you look at some of the earnings reports these other companies have put out, that, look at all four of them, the last four earnings report, they all beat on revenue and estimates, and earnings, I'm sorry. And they didn't really run on that. I mean, expectations are getting really high. In fact, Advanced Auto Parts sold off about 15% on a revenue beat and an earnings beat. GPC was flat on theirs. O'Reilly bumped up a little bit, I think 3 or 4% on theirs. But I think expectations are getting to the point where they're really, really high. And we've seen all these people come into this market, the tailwinds are there, and everyone knows the tailwinds are there. I just worry that this stock is just so high, it's run so far, that any kind of non-perfection on this earnings call is going to be seen as, well, let's take our profits. Yeah. So, Tom, what do you think?
Yeah, I think guidance is going to be key here moving forward, inflationary pressures. But one of the things I wanted to ask you about, so, EVs are a small segment of the overall market right now for auto sales, right? It continues to grow, but it's still a small segment. Is AutoZone and the rest of these, these auto parts, providers, are they going to be in trouble because if I got an EV, right, and it's not a standard, combustible engine with the same type of parts, maybe I'm a little bit more weary on doing the work myself or having it done for me, buying the products, where maybe in 5-10 years that, hey, a lot of their business dries up because, hey, if I buy a Tesla, I'm probably going to take it to Tesla to get fixed because it's not like a standard combustible engine. Right.
Right, you're not going to change the carburetor on your Tesla. I think that you're absolutely right when you think about the type of customer who's got grease on their hands and they're under the car and they're got their wrenches out changing parts out. You throw an electric vehicle in front of them, and that's a learning curve. They've got to make that decision. All right, I'm going to invest months of my time into learning how to fix this type of car and to do it myself. That's a completely different beast. And maybe that for that customer, maybe they're not buying electric vehicles. I think that would be the counter argument, is the person who fixes their own car is not going to buy an electric vehicle. But as more and more people do, it is going to squeeze the market a little bit. So I would have a little bit of concern there. But overall, yeah, I think it's really just a reflection of the stock price. If this stock, instead of it being at 2,500, it was at 2,100 or 2,000, I'd be a little bit more bullish because I think expectations are lower. I just worry so much that these expectations are incredibly high, and it's been the winner, right, in a tough trading market. This has been a really, really strong sector, really strong stock, and so they've got to nail this earnings report in order to keep this up, I think.
Yeah, and your chart on your mentions count kind of is reflective of that, where the stock price has, crossed over, gone far above that specific level where the mentions are. So, yeah, kind of reflective on that. So if you did have an earnings score, what is it here, Landon, going into this?
Sure, it's plus 11, which, is basically neutral, leaning on the bullish side, but probably on the sidelines here. And if you do like this company long term, I would probably sit this earnings report out and just see how they report. But I'm really interested to see how you guys trade this, because as a $2,500 stock, it's tough to buy shares of. And so I'm interested to see what kind of option strategies you guys put together, because $2,500 a share is really tough to trade, but you can do a lot more with options. So I'm sticking around. I want to see this.
Yeah, and small share float, only 18 million shares publicly traded at this point. So that throws another wrench into the volatility story. All right, Landon, great stuff as always. Appreciate it.
Great. Thanks, guys. Take care.
All right, that's Landon Swan, co-founder of LikeFolio, breaking down the AutoZone data here, Kev.